Well, hello everybody. Let's get into the midweek update. Coming out of that holiday, we're ending in August and we get into September. All sorts of fun things to talk about when it comes to some theories and some statistics when it comes to what September and October can be. But we got to focus a little bit more on what sentiment says. Let's share some trades. Make sure you take responsibility for what you follow along with. You guys know this drill.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
So the current outlook hasn't really changed much. I mean, we did come out of the extended holiday weekend a little bit reluctant. We had a gap down, but we didn't stay on those lows. In fact, we actually came off those lows quite a bit. It was still a down day overall. I'm gonna go into this chart a little bit in depth, but it's one of those things where you had a little bit of bad news going into Friday or some worries, and the markets were already kind of selling off. So it builds power. It builds kind of a psychological ideal of, look, it goes into the weekend. We got Saturday, we got Sunday, and then Monday the market's still unopen. A lot of traders out there saying, oh geez, man, I should have sold. Who knows what's going to happen? And then boom, you get that gap down. Now I would expect some follow through if it was indeed, hey, that could be the turning point. I mean, we did just come off of a brand new high in the S&P. So, but so far, not a lot of fall through. So let me just get there. Another gap today. This time it's to the upside in the NASDAQ and the S&P. Now the diamonds pretty much, I should say the Dow itself just kind of went flat. It's leaking a little bit, but we still have the rest of the day to go with. Now I kept it at a +2. I could put it back to a +3, but I'm a little reluctant because of the gap, and it is below a resistance level, or I should say what was a support level. So I'm going to keep it cautious for now, kind of a sideways outlook. But we are still definitely on that bull side. There's no panic. There's no drive to push to the downside, I should say, just yet. So with that being said, let's just go ahead and take a look at what we have. Now, this is the gap to the upside. As you guys can see, I'm going to go ahead and illustrate some of this stuff. Here's where we opened. Obviously, we gapped up, and then we're kind of staying up. Now, remember, folks, here's the SPY opened. It gapped up. So far, it's staying up. We weren't down. The NASDAQ was down just shy of 0.75%. Right now, it's up almost 1. The S&P was, well, it was down actually about 0.6, and now it's up about 0.32. So it's not like we regained the majority of what we gapped down. And the Dow itself is just kind of flat from where it opened. We do have a couple of pieces of news. I'll just get there. A big part of what the Qs are doing right now is you guys can see Google and Apple here. So Google had kind of an antitrust suit in 2023, something about Chrome. The way they advertised kind of monopolized what they were trying to do. It turned out that they threw it out. Apple being a big partner with Chrome. So they're both up quite a bit today because that was kind of thrown aside. Tesla's up a little bit here too. Well, I shouldn't say a little bit, but up 3%. So when you take 1, 2, 3 stocks and then you come up here to the NASDAQ and you're up 0.95%, well, I know why. So I don't want to say that this is a huge hurrah. This is like the greatest thing ever. That was a false move to the downside. What it is just, well, that's what it is. So let's get started here with the SPY. Let's take a look at it. Let me zoom in. And it becomes a lot of what can we expect moving forward. I got a couple of economic numbers we can take a look at. In fact, sorry, folks, I didn't finish the news, but manufacturing numbers were in line with expectations, staying below that 50 level. Now, that's just, there's the PMI manufacturing. Now, they weren't falling apart. They're actually in line with expectations, but still below 50, which means it's the contraction. So is it showing a slowdown? Yes. Is it showing excitement? No, but at least it's consistent. It seemed to be kind of thrown out, but we do have a lot of economic news coming up the rest of this week. So here we are. What can we do with yesterday? Not a lot, but we're still within our overall trend, right? This is still working. We've seen it move down before, but this happened to be a gap. What's interesting to me is how this candle finished. I mean, the move off of that bottom showed that there were still people willing to kind of buy stuff up off the bottom here. Now, the gap up is a little bit anemic. Let me get my box here. But this gap up today, it's just kind of, okay, it might be a follow through to yesterday's close and just a kind of a push up. So it's got this, okay, now what do we do? Because this could roll right over. And what do we have here, folks? Well, we've got this pattern to where we didn't revisit the previous resistance. Why I gave this a +2 instead of a +3 is because we are below the support level, right? I was a +2 here as well because we were below the support level that we set previous. Doesn't mean I can't change my mind. So if this thing can climb itself back up, then hey, guess what? It's still glass half full. We're still moving higher. I would definitely like to err to the upside. We're also creating the ideal of, okay, are we going to get back into a larger range? Which we absolutely could. It just depends on what sentiment wants to do with this. And what's more important, folks, is how traders react to news. News is good, news is bad, news could be misread. It doesn't matter. It depends on the follow through. I thought this was absolutely interesting, meaning that, hey, whatever it was, August is the end of the summer, and we get into September, October. Statistically, September and October over 10, 12, 30, 20-year period is weak. We've had last year was bad, but the previous 2 years were really good. So I'm just going to throw all of that out because once you start to believe that, it starts to mess with your outlook on the markets themselves instead of just following sentiment. So let's just see what happens today. Yesterday, to me, said that whatever gap down was completely or a little bit overdone because of where sentiment pushed the markets. And then today's follow through. Okay, now we're here. Let's see what happens. Now that creates some problems because we really can't get into, okay, now we got opportunities to buy some bulls or get into some bears. But what we can do is quiet the noise and just stick with what's been working. So whatever your portfolio is doing, let's just sit on it, manage it, relax, follow your rules. Once we see some sort of reaction and sentiment that can create something that moves lower, we can adjust. Or if it starts to just really break out, well, if you are glass half full, which you should have been for this whole run, then you could just sit back and let that happen. So not a lot to go off. I guess my soapbox for today is just kind of sit and wait. It's too early. Now let's just go to the Qs. And this is a little bit misrepresented because of, I think, the lawsuit with Google being thrown out. It's a huge one. It helped Apple as well. So it's just kind of a reaction, but it's still kind of behaving the same. Now, I did do the end of day post yesterday for you guys that were watching it. And I said that this was a little bit more ominous because it actually retraced back down to its 50, where the S&P did not. However, there was still a lot of sentiment. I don't want to say investors or institutions, whatever. Sentiment decided, look, we're going to push this comfortably off of the bottom, and we're fine with this gap up. Was this gap up caused by the news on Google and Apple? Maybe, but here it is. So it's kind of in the same situation. Now, I did make this comment yesterday, and I'm going to do it again. It's kind of showing a little bit of hesitation here. It's showing a little bit of, well, that's a bad line. Sorry, folks. A little bit of kind of this, what could be a bullish flag pattern. But there is more in the Qs to scalp. There is more in those AI companies. There is a lot of profit in there. So it's just this kind of this taxing going on, but it's not a catastrophic fall. It's not a panic. It's not a correction. It's not a breakdown. It's not an economic stop. I mean, there's really nothing to make it anything bigger than it is. And a lot of traders need that. A lot of traders need 100% black or white. But right now, it's just kind of meandering. All right, so let's get to the diamonds. And the diamonds have been showing some strength in a lot of sectors. I don't know if you guys have been following some of the like NEM, Newmont Mining, some of the metal manufacturers, stuff like that. A couple of energy companies coming off the bottom. There's some good strength in some of these, but it's selective. Now, one thing that I thought was interesting is how strong it is relative to the others. This is above all of its averages. Now, it's not doing very, it doesn't look good today where the other ones are up, but this is just a corrective pullback above its average, ascending triangle breakout that was absolutely confirmed. I think that might have been the Powell announcement, but once again, it's consolidating or pulling back here. It's quietly stronger. So kind of take that for what it is and look for strength for where you can find it. So that's where I'm going to start. Now, when it comes to adding trades, we're in the same situation. I found bulls that stay bulls. I found bears that stay bears. So if you guys want to take a look at some, that's great. All right, so you guys got a few lists or things going on, but let me go ahead and just start with a couple that have been bouncing around with us. One that I wanted to bring back up, Roblox was a darling company. It was one of those, I don't want to call it Mag 7, but it did definitely participate on it with it. And it's been wonderful. I brought this up again yesterday. This came from this class, so good job, guys. It was a sideways trade, but take a look at this bullish engulfing candle. We did see a gap down just like everything else, but it retraced enough to actually get to this upper level above this area. And what I talked about was, hey, it could stay within its range, but I'm going to lean more towards a breakout above resistance. So I do like this. I still need to be patient with it. Roblox is one of those things that if it starts to move higher here, I'm not missing much because, I mean, we know how this can move when it wants to move. So I'm going to stay patient on this. If you want to get early on it, just make sure you give it enough room to go up and down. So if you want to, hey, let me do something like a credit spread or a diagonal spread, just make sure you give it its due and let it flex. And what I mean by that is, let's go down here to the ATR. Where is that ATR? 622 a day. Understand that, hey, you got to give it a pretty good rate. So if you're going to sell something against the at the money, you got to make sure that you give it at least that $6 to the upside for it to actually move. You might want to double that if you're going to go a week or 2 weeks out. It hasn't confirmed for me yet, but it does look pretty good. I'm going to wait for it to just get above this area. So I thought that Roblox would be kind of fun to move from the sideways to the upside. Another one that I thought was interesting, and it's in a very strong sector. Financials is super strong. That sector's been good, is PayPal. And I'm just not sure if it's kind of run its course or if it's got competition coming that can mimic or do what it does. It's almost bearish, but it seems to be comfortable within kind of an established range. And I'm going to try to include all this back here. And then I'm going to go ahead and box where it's at. So you could see that, it's consolidated back here. I mean, as far back as March. Flew through it like it was nothing, but now it's back to this area. It's below the moving averages. Everything's stacked to the downside. If anything, I would say sideways to bearish. But for some reason, it just won't give up the ghosts. It just comes right back up and kind of meanders and stays in this consolidation range. And it has been ever since its earnings. So if you're looking for something kind of a sideways, I mean, this seems to be kind of set out to the side. It doesn't seem to be participating as much as some of the other ones that are going up in the financial sector. So just something to sit on if you're looking for sideways. Might be kind of cool. So the last one I'm going to show you, and then I'm going to go to the picks, is CAV8. Now this is the restaurants. We talked about consumer cyclical. You're either winning or you're losing. I found quite a bit of restaurants. I'm also seeing some retail, outside retail that was stronger, like Dollar Tree. I thought was great. It's starting to fall off. This is a restaurant. Well, I don't know. I mean, it's a company that carries forward a bunch of restaurants, and it's been bleeding lower. This has been on our sideways to bear list for a while. I remember I had the sideways with an asterisk, and the reason being is because I would like to see it go a little bit more bearish if it could break these support levels. And it's not breaking them hard, but it definitely is breaking them. Well, guess what, folks? We're doing this again. This is a descending triangle pattern. So I don't expect this to just drop down to 60 anytime soon, but that slow bleed, that credit spread, that diagonal put spread, something that you can kind of just put to the side and make a couple of bucks on a slow bleeder. This is still showing some good signs. Now, if it decides to bounce, well, then it's still within that sideways range, but I'm kind of leaning a little bit more towards the bear side, especially in light that the markets are kind of recovering from yesterday's gap and this isn't. So we'll see where that goes. All right, folks, let's get to a couple of trades that you've posted here. Let's start with Reddit. I know this is always a fun one to look at, right? Reddit, a darling stock, a company that a lot of people follow, one that's relevant, and thanks Mason for these trades. So yeah, it's a bullish corrective action. It pulled back. It's playing around that 20, but once again, it's kind of susceptible to coming out of the long weekend. Where do we go from here? It's past its earnings. Earnings seem to be super happy about it. However, okay, is this a time to harvest Reddit? And what I mean by that, takes a profit. We're getting into that. We're getting closer to the end of the summer, and then we got the fall and the winter, and then we have the end of the year. So we're about halfway through. So do we start to scalp and post some profits so we can carry that into 2025 and 2026? Okay. Well, the way that this is behaving lately, the answer is that's exactly what's happening. We have no idea. Up, doji, down, doji, up, huge shooting doji. It's just for every buyer, there's a seller. So this is more of a consolidation. Now, Mason, I would agree. I think over the overall chart is going to be higher. I think with any sort of comfort in sentiment and stability, then yeah, I think this could actually climb higher and move. But it's going to be a little choppy for a while. And I don't imagine that changing until we get pretty much comfortably into September and into October. It's funny, folks, because these are the transition months. It's proven to be that way for a reason. It's the end of summer. It's a transition back to work. And then institutions and traders go back to work and realize, okay, should we scalp here? Should we take profit there? What do we do? It's a game plan. Think about, we got the beginning of football, right? Football season starting. Well, coaches got to get back, scout other teams, realize who they're going to cut, who they're going to keep. It's the same idea. So it's kind of in this area, but it is showing strength. So it could be something to keep on the bull side for now. Let's take a look at ORLY, O'Reilly. This is another one that had been super strong for quite a while in an interesting sector because it's consumer cyclical. But auto parts is almost defensive, in my opinion. I've just seen it kind of react defensively sometimes. It does have a very bullish pattern. It looks really good. I like the resistance up at this area. It does have the ascending triangle going on even since this push breakout. This was a big move for this stock, really big after its earnings. So this might kind of float around for a little bit. I still think it's more of a defensive play, but once again, if it can confirm, it's a good move to the upside. It's been pretty stable as of late. Let me add that one. As far as Reddit, I'm just going to leave it off. So just keep it on your personal watch list. Kelvin's got cup and handle pattern on TJX. These are the other stocks that were not doing very well, but just came in. TJX companies, consumer apparel, like I say, Dollar General was a pretty good one, stuff like that. So yes, I like it. The cup and handle. Oh yes, okay. I can't draw a curved line, folks, so I'm just going to do my best at a cup and handle. All right, okay, there. I like it. Yes. More importantly, if you didn't identify the cup and handle, folks, understand that this pulled back to a significant breakout. Now, it did have a good push from its earnings, but when you bounce, I'll get my arrow, at a specific line here, understand that's the breakout level from this resistance. This is new territory. All of a sudden, this is new territory. So yeah, I like it. Be mindful that it could chomp around as it gets into some indecisive markets. If sentiment decides to cool off and go to kind of a zero, it could bounce around. But it's a good one as far as a candidate to the upside. Let me add that. Let's move over to SGI. It's another bull, consumer cyclical, right? Look at this, furnishings, fixtures, appliances. Super selective. I hope you guys are seeing that because we take a look at some of the strongest and weakest, and I've been identifying this, or we have as a class, for a while. Very specific. Hey, this sector is not very strong, but then you'll find stocks like this. I mean, that's an ascending triangle breakout. It didn't even retrace at all. It just set another level and then it just pushed higher. So yeah, it's kind of on this, let's get going until investors want to stop putting money into it. So absolutely fine riding it. Be leery of the extension away from the 20-day moving average. But once again, if it's in its acquisition phase, meaning traders are just buying it, I don't care why. Let's just kind of follow the momentum. Just make sure that you've got your risk reward set up on this Cassandra, and make sure you got a target. The only thing I'd be a little bit worried about is if once it does pull back, you might see something like this. So if you're playing like an 85, 88, in the next couple of days, it might pull back to 80. So just be mindful of that. So I do like it. I like the way it's going. It feels a little extended, but I'll go ahead and put it on the list for the upside. Let's take a look at another one of those. Let's look at Deck. Yeah, Deck is one that was kind of all over the board here. If you look back, I mean, it just seemed to do pretty good. This consumer cyclo, footwear, accessories, it's just, hey, everybody's happy about it. Then it has its earnings, and everybody decides they don't want to be happy. And you take a look at this, the earnings probably weren't too far off. It might have just been projections or expectations and worries of tariffs and the slowdown, because that's the time. And it was beat down. So it's back down, had earnings again, gap down. So it looks like it's trying to emerge. It's difficult because this is more of, I don't even want to know if it's a reactionary stock versus something that's just scalped. I mean, anytime this gets any sort of traction, it seems to be sold into, right? This is a pretty good move. Earnings might have been pretty good here, and it was sold into, right? So now it's moving its way back up. It's back up to these levels. You just got to say, okay, is this an opportunity for somebody who wanted to sell back here or here that they can sell again? It's pretty extended. I mean, look at that move. It's floating higher, and I can say that with a little bit of confidence just because I'm not seeing any sort of participation that would really push this higher. I mean, we did have a huge amount of volume there to push it here, a big volume amount here to push it there. But look at this move. That just could be a slow short cover rally, so on and so forth. Be leery on this one. Be leery on it as far as a bull. I'd let it kind of settle before I made a trade on that one. But it's an interesting chart. All right, thanks. Let's take a look. I'm going to jump back to Cassandra PHM. There you go, Pulte Group. So this is one that I've been confused with the home sellers, Zillow and Pulte Group. Are they interest rate sensitive? Are they businesses? Is it because home prices are kind of stable? They might not be selling as fast, but they're not coming down, at least where I live. But boy, for some reason, it looks good. Let's take a look at, just real quick, let's take a look at Toll Brothers. Okay. What about KBH? Okay. All right. So we're starting to see a little bit of strength in some of the home builders. It's a really cool thing to look at. So let's go back to Pulte. I like it. I think it's nice. It's wonderful. Look at that. Just a nice move up today. Good ascending triangle pattern. One of my favorites, by the way. Yeah, everybody's got their favorites. Doesn't mean it works all the time, but I do like that a lot. Is it interest rate based? I don't know. It could be. I mean, I don't know how it couldn't be, but right now it seems happy and it's a good trade. I like that. Let's add that to the list. All right, let's move over to Schwab. Still looking at a sideways. Earnings aren't for another 6 weeks, so unless there's a market catalyst, it might meander for a while. Yeah, it sure as heck looks like it wants to. What's neat about this is it seems to base and then move higher. Obviously that was earnings, and then it gapped up, got excited, but it doesn't really just take off. I mean, I shouldn't say that because it did take off back in here, but it kind of sets a level and then it shoots up, sets a level and shoots up. I do like the sideways approach on this for sure. I do, Todd. I think it's great because you're seeing these cool shadows. Look at that shadow, 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 shadow. So there is a support level definitely, right around that 94.50 mark, or we'll call it 94, just a flex. But it seems to have equal when it comes to taking some profits. So yeah, something sideways, range bound, a condor would be kind of cool. If you see this start to climb higher, because financials have been strong as of late, doesn't mean they're going to stay strong. But if the financials start to roll over, or if the financials get stronger, you could try something like a broken wing butterfly or a skewed strike butterfly, something that opens up the upside. It'll definitely take away from your risk reward, but it'll give you the opportunity to not give away too much profit if it decides to shoot higher. The other thing, guys, that you can do, and I'm going to kind of lean towards this as well. If we're going to have an indecisive couple of months, September, October, and a lot of it is noise. Trust me, a lot of it's noise. Statistics says this. We see economic numbers. We're seeing all sorts of news events. But sentiment seems to react to it and then react against it and then to it and against it. If I see complete panic, well, that's something. I see complete euphoria, that's something else. Just make sure that you take into consideration that, and you could do the shorter term. 2 weeks, week and a half, stuff like that. And then if Schwab still looks good, look for another week and a half or 2 weeks. But I do like it. That's a good sideways trade. Thanks for that. Let's write it in. Mike's got AZO. Yep. AutoZone, very similar to O'Reilly. These things just keep putting higher and higher. Red candles, but it's not falling apart. So it's at a place where, hey, we can, that's a gap up. It went all the way down to here and then closed slightly lower than it opened, but that's still an up day. This gap down closed slightly higher than where it opened, but it's still a down day. This is an up day, but it closed lower than it opened. So this is kind of misleading, but what you're seeing is, I just noticed, holy geez Louise, it's just meandering and it's comfortable at that level. This might be an extremely hard to trade because of the stock price. Even the options are going to be huge. However, I like it though, Michael, because thanks for bringing this up, because guess what? It's AutoZone. Consumer cyclical auto parts. We just looked at O'Reilly. There's probably 6 or 7 other companies that could be similar to this. So if this one's just way out of range, I like O'Reilly. I think it's great. This one's decent as well. So just look for something a little more affordable. That's what I would do. But it's a good chart. Thank you for that. All right, let's get into some bears. I'm going to go back up to Mason. ACN. Accenture, yeah, a lot of this stuff is rolling over. I don't know, folks, if you've gone through our lists that you guys and I that we've been building together for the last few weeks, but a lot of them really haven't. A lot of our bears that have gone against us really haven't turned into bulls. It's just more of stuff like this. I do like it. I like the consolidation here. You just have to be patient, wait for it to fall. Adobe, folks, on a side note, if you're bored listening to me, go ahead and take a look at that. I still like Adobe, but it's not falling like it was. So if you could just be patient and let this kind of slowly bleed. And the reason why I don't believe it is because I still believe that sentiment is still bullish. It still is, which is why these bears really aren't getting hit as hard. I do like this, though. Mason, thanks. I think it's cool. Be patient. Something sideways to down. I'd wait for it to maybe start to break below that 20-day moving average here. Below the 250 be cool. But if you want to play like a credit spread as it does that or a diagonal, that's fine. It's a decent trade. Let me go ahead and type it in since we don't have a whole lot of bears. Let me take a look at the other one there. This is GIS, General Mills, I believe. Yep, General Mills is still sliding lower. One of my favorites was Campbell's Soup, and it was doing really good, but then all of a sudden it just went nuts on me, so I can't trade it anymore. It was a really nice, steady, something like this, but it's as of late, it knocked me out a couple of times. But I do like General Mills. It is a little bit more volatile than you think. And it's, hey, if we can get below this 49 level, but these gaps can happen quick. These moves up. Look at the top of that shadow there. We're pushing that $50 level, 50-50 maybe. But the overall 50-day moving average is gorgeous. The 20-day even looks really nice. So wait for this to break. But you might not get too much. When they do break support levels, check this out. I can throw this out because it's earnings. Here's a good support that was kind of broken. It does this stuff, and this is what's tough, this back and forth. And then it's almost going to break. It doesn't break yet. Here it looked like it was breaking, but guess what? It's taking a little bit of a hesitation. So understand that these can bounce pretty quick. Don't get too greedy with it. Just kind of allow it to give it a little bit of volatile move and slowly leak down. All right. Okay, I think that's enough. I think let's keep it there. This is what's happened since I've been absolutely babbling. Looks like the Dow is sliding a little bit more. NASDAQ's going to meander. I don't think it's going to fall too far off of that just because of just Apple and Google themselves. And the S&P putting on about half of what it lost yesterday. It really does create this area of, okay, well, I really can't get a read out of it as far as trend trading from one day to the next. So we really have to incorporate 5, 6, 8 days. But just trust in this. We've seen it pull back. This was beautiful, uniform. Even though this was an event, it was still, the probability was still there. Here's a gap down. I'm like, okay, let's see where this gap goes. I thought we'd go a little lower. I thought we were going to test this 50. We turned right around with a gap. Doesn't mean we can't go back down. So I can't be bearish. I can't. I like some of the bearish trades, but I'm going to still be -1 on them. My bulls are going to be +1s, +2s. And let's just see where this goes. Fun class today, folks. So here's the trades. So these are all really good trades. I like them. Just be mindful of whatever you decide to follow, or whoever, whatever trade you suggest. It doesn't have to be exactly what I talk about, or if I say this is a good +2, it could be a +1. Just make sure that you make it your own. All right, guys, great class today. Thank you very, very much, and we'll talk to you next time. Bye, everybody.